Hello traders, hello everyone, my name is Gregor and welcome to our new episode for this week, Surfing the Elliott Waves, where I'll look at some of the most interesting structures for this week. This video has been brought to you by Orbex. I will look at the euro dollar, cable, dollar yen, Aussie and crude oil. Now on euro dollar, last week we discussed about the potential reversal with more weakness in view, either after a completed very big but still complex correction because of the 7 swings, or maybe this is just a temporary pullback in 3 waves back into wave 4 as shown here on the second wave count, where this is also a very good option with an incomplete ongoing 5 wave rise, meaning that you are now in a wave 4. But even this wave 4 can still, if it's temporary pullback, could still see lower prices back to the pivot point of the previous wave 4, or maybe even back to this termination level of a previous 4th wave. So looking at the 4-hour chart, well, we have seen a very nice 5 wave drop here, which I think it's a wave A. So I'm expecting more weakness after this recent 3 wave rise. Now we are testing currently this lower trendline support of this corrective channel. So if we can see a daily close today below this channel, let's say beneath 1.21 level, then I think that wave C is ready to continue lower. So until then, just keep in mind that wave B can always become more complex, and if we see suddenly a new jump higher here, then next very important resistance would still be here around 61.8% fib level. So my view for a wave C drop will not change unless we see a rise above that January high. Now let's take a look on cable. Now cable, firstly, just to revisit again this daily chart, you have plenty of overlaps up from 2020 lows, and notice that this current rise is slower compared to the previous recovery. So in my opinion, this can be a final leg of this recovery, and I would not be surprised by a reversal. We are also moving with this current 5 subwaves within wave C into very nice potential resistance area. This is also confirmed by this divergence on the RSI. Plus, we have this potential ending diagonal that can be forming here in wave 5. But unfortunately, we don't have enough price data to say that this stop has already been put in place. Notice that this recent drop is so far only still in 3 waves, but always when you are expecting a top or a low confirmed by a price action, you want to see very aggressive either rise in a 5 wave structure if you're expecting a low, or a drop in 5 waves, and for now that's not the case yet. So I think that we should be very careful here when trying to call bearish trend. Actually, from confirmation point of view, it would be very nice to see not only first support broken, but definitely the second one here at the former wave 4, if that's an ending diagonal. In such case, I would be looking much lower here on cable. Now let's take a look also on dollar yen. Now dollar yen has recently moved out of this wedge or ending diagonal, if you want. Also here you can see this broken trend line, so I'm expecting more upside. There was a very nice clear 5 waves up here into wave A, maybe even wave 1. So this is seen as a counter trend movement that found perfectly support at a 61.8% retracement. So I will continue to watch for more upside here in the next few days. Now for now, invalidation level still remains here at 102.57. So as long as this one holds, I think that bulls remains in the cards, at least for the short term. Now let's take a look also on Aussie dollar. Now Aussie dollar, firstly daily chart here. Now Aussie dollar remains in recovery mode. We have seen a very nice and strong break out of this downward channel here at the end of last year. So I'm observing a 5 wave incomplete ongoing cycle here from that levels. Looks like that was wave 1, you had a wave 2, and current very slow price action can be wave 4. Now also keep an eye on this trend line, potential supports right there around near term levels, and there you have also this previous swing high that could become very nice support. As you know, whenever you have a very strong support and then a decisive break through that support, through that resistance, then this resistance will ideally become very nice support at the same zone right there. Okay, so I'm expecting this to play out here meaning that there could be slightly maybe more weakness if that's a wave A, wave B triangle, and then you see another drop down and then a reversal. But 0.7630 is definitely the area where I would be expecting another turnaround. If maybe this wave 4, this whole price action will just stay and continue sideways and not go lower, then I think that this could also be an ABCDE triangle. But in both cases, I think that this is a corrective movement and that it can be just a little bit more complex than we think before these bulls will try to push prices higher. As you know, this market is trying to be correlated with the risk on move. So if you see stocks moving higher, then I would be looking for Aussie dollar to bounce as well. Of course, there's not always tick by tick correlation, but generally I would be more interested in commodity currencies if I see stocks moving higher. So it's also not only stock, but it's also very important to keep an eye on crude oil whenever you are dealing with commodity currencies. And what I see here is on a daily chart, firstly, it's still very nice and ongoing wave 3 that could face some resistance here at this fib zone, but for now there's still room for 55, maybe even $58 per barrel, especially if we consider that this recent drop here appears to be in 3 waves. So I see this as a correction, ideally wave 4 that is now signaling for higher prices into wave 5 of 5. So crude oil remains bullish. It means that if stocks will also continue to outperform, there can be Aussie dollar trying to find a new buyers, while the US dollar maybe against the other currencies could stay consolidating, or for example like against the euro. Okay traders, thank you very much for your attention. I hope that you enjoy this video, and again, as always, I will talk to you next week. Bye.